with Nigeria's consumer and agro-allied companies posting solid earnings or results for the full year 2025 with strong numbers from big names such as BUA Foods, Unilever Nigeria and Okomu Oil Palm drawing market attention as well as investors. Those results show resilience across food, fast-moving consumer goods and agriculture despite macroeconomic pressures. Now, the key question is whether these earnings signal strong consumer demand and what they collectively reveal about the state of the Nigerian economy. Let me go to the wall and sit down, talk to my guest, Johnson Chukwu, the Group CEO at Carry Asset Management. A good evening to you, sir. It's good to see you in the new year and in the new month of February.
Good evening, Boston. Thank you for having me. And Happy New Year, a Happy New Month.
It's always good to have you on the show with your hands-on analysis. Let's start with this, Eddie, and I'm sure you're smiling to the numbers. Let's start with the consumer goods as far as BUA Foods is concerned. 1.8 trillion naira revenue. That's roughly 2 trillion for full year 2025. How much bigger can this be, in your opinion?
Boston, what I would say is that the BUA Food report is very impressive. Apart from a top line of 1.8 trillion naira, they also had a profit after tax of 507 billion naira, over half a trillion naira in profit after tax. And that's an improvement, material improvement from about 265 billion profit they made last year, which we all thought, they made in 2024, which we all thought was exceptional. Now you're talking of an increase of almost 90% of that 265 billion to 507 billion in profit after tax, and earnings per share of more than 28 naira per share. But if you decompose BUA Food performance, you observe that revenue is growing faster than cost. You saw an increase of about 18% in earnings, gross revenue, and only about 14% increase in cost. And that actually is a positive indication that costs are now slowing. The increase in costs is slowing less than we are witnessing increase in revenue, which is good for business growth, which is good for investment in a climate. And that cuts across all the companies, almost all the food and beverage companies, all the consumer goods companies that have so far published their unaudited accounts. But one of the things that actually led to the astronomical increase in profit after tax of BUA was a major saving in interest expense. If you look at their performance last year, you observe that they paid down over 500 billion in loans in sometime last year. Not last year, 2024. Yes. So when you compare their cost of borrowing in 2024 to that of 2025, you saw a decrease from about over 200 billion to about 21 billion, about 203 billion that they paid as interest expense or cost of finance in 2024 to just about 21 billion. They had a boost in their cost savings in terms of interest expense saving of about 203 billion. So that also contributed immensely in propelling the sharp increase we saw in profit from about 265 billion naira to over half a trillion naira, about 507 billion naira in a single financial year.
Very interesting. When we say sales, for example, for BUA increases during the full year 2025, or revenue, was it just about raising prices, or that consumer spending also increases in terms of demand?
Well, it could be the two factors. I think if you look at an increase in gross earnings about 18%, it could be because of slight adjustments in prices. It could also be a minor adjustment in prices, but I'm not aware that they had a material increase in their prices. But you also could see an improvement in consumer demand, so in terms of volume of sales. And I think that is also reflected in when we look at other consumer goods. We are gradually beginning to see some improvement in sales that could be attributed to increase in volume. We know that in 2025, not many consumer goods companies were able to increase their prices at a time when purchasing power was weak. Yes. I'm not aware of many companies that actually increase their share prices or stock during that year. So I think most of the increment we saw in revenue will be driven largely by increase in volumes.
So what we hear from the industry is that, look, prices were jacked up massively, 2023, 2024, perhaps because of the fuel subsidy removal and the FX realignment. Of course, those were two brutal years, as it were. So it looks like things are changing. So let me just take you through, walk me through, by the way, the revenue for Unilever, for example. And that interests me a lot because this is Unilever showing, and if you just put that on the screen, you can see personal care, beauty and well-being, sales, local, exports, all in double-digit growth.
Yes, Bosin, that's another interesting case because we know that Unilever at some point was struggling. But if you look at their 2025 performance and compare it to the 2024 performance, you saw a materially increased improvement in almost all the parameters. Top line, bottom line, we saw increases, improvement in almost all the parameters. We saw improvement in profits by over 50%. I mean, net profit before after tax. We saw an improvement over 50%. We saw an improvement in gross earnings above 50%, well as increase in cost was below 50%. So we saw, like I said, in almost all the parameters, we saw improvement even in their interest expense. We saw interest income or finance income increase materially, which also means that they are seeing an improvement in their financing activities. So all these things are indications of an improving business environment. Yes, most of women say that, look, at the micro level, at the individual household level, they may not have begin to feel it. But if the trend is sustained, we'll certainly begin to see an improvement in average cost of living of average Nigerians.
Okay, so if you just take that back, as far as Unilever is concerned, with the numbers, revenue 214.6 billion, food segment alone, revenue was 128, roughly 129 billion, roughly 130 billion, foods alone. Then you go to personal care, what they called, well, body cream, whatever it is. Then you go to beauty, what they call the lipstick index. The lipstick, when women want to look very good. Well-being, that's very robust as well, 26 billion, 0.4. So this just look, despite the tough operating environment, Nigerians want to stay looking good, just like yourself, very fresh, well-powdered, whatever, looking really good, and nobody wants the effect of the economy to show up on them. Is that what we're seeing, especially for personal care?
Well, both on a lighter note, I mean, your makeup artist made me look more beautiful so as to excite my wife more.
All right. I think she's going to get a raise. I'm going to recommend to the chairman, our chairman, for her to get a raise for making you look good. And all our guests look very good. Good job for the Abuja team. Thank you. Yeah, seriously speaking, Nigerians are spending more. Good job.
Yeah. Yes, even if you look at the rebased inflation figures, you observe that the weight of personal health care items, personal health care in the rebased GDP figure shows a material increase, which then means Nigerians are spending a lot more on looking after themselves, looking about how they look. And that is reflected in the revenues of companies like Unilever. You started from the food segment. And you know, interesting thing about the food segment is that we know that irrespective, the food is one of the least discretionary consumption that household consume because it's the last thing you will adjust for. So we saw a strong growth in their food segment. And then we also saw a material improvement in the healthcare and beauty section. Like I said, even the GDP, I mean the inflation figure, rebased inflation weight indicate that a lot more household consumption expenditure is going to healthcare and beauty products. But Unilever is a proof of one of those enduring entities in this country. You bear in mind that Unilever is one of the longest surviving corporate entities in the country today. And if you look at their profit, we saw, like I said, we saw an improvement from about 39.9 billion to over 60 billion in a single financial year. And that's is very close to more than 50% increase in their net profit after tax. So give and take, you are seeing material improvement in top line, you are seeing material improvement in the bottom line, and what that means that this company is in a much stronger position. But for me, it's an indication of what's happening in the economy. I had mentioned earlier that we are seeing increase in revenue that is outpacing increase in cost. That's not what we saw in some previous years. Like you mentioned 2023, 2024, when inflation was in the region of inflation topped 34.8% in December 2024. But now we're talking an inflation figure that had dropped about 15.15% as of December last year. So that will show you a material change in the costs, in the corporate or what firm inflation rate, as well as in the general consumer price index.
Broadly speaking, and if I just take that to Okomu Oil Palm, which is the third consumer goods company we're talking about tonight in terms of agro-allied, and that's where Okomu Oil is coming through, revenue roughly 200 billion for the full year 2025. Even local and export sales of refined palm oil, it's about 13.3% on the numbers. But you look at the cost of sales, operating profit, finance costs, does it look to you like these food consumer goods companies are in the money as we speak?
Yes, they are both. Let me correct something before I come back to Okomu. Actually, the profit for Liver Brothers moved from about 15 billion to about 30 billion. About 100% increase in profit, about 102% increase in profit after tax. Yes. It's Okomu that you had about 39.99 billion to about 62 billion.
Yes, you're correct.
And if you look at Okomu, like you said, yes, if you look at Okomu, like you said, we've seen, for me, if you look at their trajectory, you've seen consistent improvement in top line, which also means that they are in what you may call a sector that has basically been able to sidestep even the difficulty we have in the economy. Obviously, because their products, which is crude palm oil, is not just demanded locally. We don't have enough production, enough supply locally that we still have to import, but also highly demanded externally. And that's why we saw that even when Naira weakened, they actually made good profit. But in the current year under review, that is 2025, we've also seen consistent increase in their top line as well as increase in their bottom line. If you look at their cost of funds, like I said, in the finance income increased to about 10 billion for a company operating in this country, which means they now have surplus liquidity that they are now investing even in short-dated financial instruments. So they are not just making money from their operating activities, cooperating activities, they're also making money from their financing activities.
Interesting. Earnings per share and all of that looks really good. But just as we begin to summarize, cost of sales for these companies looks really a little bit on a very high side. For example, Unilever was about cost of sales about 125 billion. BUA Foods, cost of sales about 1.1 trillion for a revenue of 1.8. You agree that this is a bit steep on the upside, isn't it?
Yeah, but what you look at is the gross profit margin. If you look at almost all of them, if you look at the likes of Okomu, you saw a gross profit margin of over 50%. That is quite good enough. Bear in mind that you have direct cost of operation of producing goods and services. And in a period where price levels have become elevated as a result of one, depreciation of the local currency or devaluation of the local currency, two, high inflation rates, you don't expect that as they are increasing their revenue, that the cost associated with producing goods and services will not also increase. So what matters is if you look at, compare the preceding year's cost of goods sales margin to the current year, I think it was only one of them that saw a marginal decline in cost of goods, deterioration in cost of goods margin, cost of sales margin. I'm not worried about that because what you look at is that are you growing revenue at a rate at which faster than the rate at which your cost is increasing, which applies to almost all of them. All the three companies we just discussed now. So that for me is not a concern. The concern will be if I'm beginning to see a cost of sales margin in the region of 70%, then I'll be worried because I would think the other operating cost will swallow whatever difference you have, whatever margin you have, and that will weaken the profitability of these institutions. But if you look at the net profit margin, they all recorded net profit margin in the region of 28-30%. That's quite impressive for an economy in our current state.
So broadly speaking, and conclusively, would you say that these companies begin to represent an outlook on the economy that we're putting the reform of the past 2 years or 3 years now behind us, or we're beginning to see some gains, as it were? Consumers are beginning to come back, consumer spending is beginning to go up. Is that conclusively so?
Yes, both in starting from the consumer goods sector, we are seeing what you may call light at the end of the tunnel. And why do I say light at the end of the tunnel? If you are seeing increase in volume demanded, that simply means that gradually the household purchasing ability is recovering. It is not to the point that it has become pronounced in most households. But for the middle income earners, we are seeing gradual recovery in household consumption. And this does not apply to only these three companies. If you look at across the brewery industry, we are witnessing the same thing. If you look at almost all the consumer goods segments, operators in the country, we are witnessing the same thing. Gradual improvement in volume consumed. Because I always say, look, you have to put it in a proper context. What matters is not the naira value, but the volume of goods consumed. That's actually indication of how the economy is doing.
Interesting. Interesting. Thank you so much, as always. It's good to see you in the new year once again. Do have a very great evening there in Abuja. Thank you so much for those insights on those analysis on the earnings. We'll get back to you in the days ahead. There's a whole lot more. The earnings season is just getting started. Thank you so much. The Group CEO at Career Asset Management, Johnson Chukwu, are there. Let's